This conference will now be recorded.
All right. Well, good morning, everybody. This is Andrew Cole with East Orlando Chamber of Commerce, and we're here for financial survival and recovery prep for the long haul. And we've got a great panel, and I am not going to do a bunch of intros and introductions on this. I'm just going to introduce you, and then we'll just go in order as after I introduce you. Say who you are and what your expertise is, and we'll jump into some Q&A and some topics here of what's going on during our financial situation. So this morning, we have Kyle Davis with Integrity Financial Group. We also have Sam Fragale with Edward Jones and Tanya Leonce with True Books LLC. So with those, we'll just kind of start where we were. Kyle, we'll start with you since I was first one to introduce you here. Tell everybody a little bit about yourself, what you do, and why you're an expert on our panel today. So
sure thing. Good to see you, Andrew. I miss you all. I miss my East Orlando Chamber people. I'm Kyle Davis, owner and founder of Integrity Financial Group. We're in East Orlando. We're a retirement planning firm. I'm a retirement planning specialist for small business entrepreneurs and solopreneurs. And I am on this panel to hopefully help give some perspective about what's going on right now, a lot of questions people are having, and a lot of exceptions to the rules that are happening right now that people have more options on their table than they used to help get through what we're going through. So hopefully I'll be able to shed a little light on some things for you guys and send you away feeling a little bit better.
And then we have Sam Fragale. Sam, introduce yourself for us.
Good morning, guys. Yeah, my name's Sanford Gayle. I'm a financial advisor with Edward Jones. My branch is right down the road in Lake Nona, so that kind of southern peak of the East Orlando, isolated all the way down there. So I also do retirement planning. I specialize in working with engineers primarily. That's kind of my niche. But there are a lot of changes that have come up with the CARES Act and everything that's kind of occurring right now in our lives with Corona. There's a lot of negativity and false information out there that you can see on the news. So with stuff like this, it's awesome because we're able to give some more education and some factual information and updates, which is why I love the chamber bringing this stuff to the surface. So I'm really happy to be here and happy to see you guys and happy to hear what everybody else has to say as well. So thank you.
Great. And Tanya, tell us about you.
Hey, good morning. My name is Tanya Leon. I'm with True Books. I'm a certified QuickBooks Pro advisor. So we do bookkeeping and accounting needs. I don't do taxes, but we work with accountants that do taxes. So we hear a lot about, the CARES Act and, the loans that went out for new business owners. So just being able to provide, kind of any insight of, what we can do from just a business aspect, trying to work on those budgets and see how we can, kind of minimize, spending on non-essential items and just being able to keep afloat. So.
Oh, great. I'm having a little bit of a technical difficulty here. I have a screen share from what I understand. I don't know, I can't see what I'm seeing anymore. So unfortunately, I don't know what you guys are seeing when we're doing, but I have run into a little bit of a piece there. Is my screen still being shared?
No.
We can
it's
see
just people.
Just the people. That's what I wanted. So, okay, sounds like a plan. All right. Well, anyway, good morning, and thank you all for being here. Sorry about that as I'm trying to get myself organized here. Never fails. Every time there's a little glitch on everything that we do technology-wise. So without further ado, let's go ahead and talk a little bit about where we are today. Sam, I'm going to start with you. Just kind of give us an overview of where we were and where we are today. I think we all know that in a sense, but just kind of maybe in a number sense, and I don't mean to throw anybody just there, but just so that we have let's talk a little bit about where we are here, so then we can get into the meat and potatoes, just kind of let's set the stage here. Are you willing to jump on that, and anybody else on that too? And then we'll kind of get into some questions.
Yeah, absolutely. And I'll try to keep it brief and so that everyone can kind of touch on it. But basically, from a biological standpoint, we're kind of in an unprecedented time, right? We've never really been shut inside. We've never had to quarantine. So this is something that we're all kind of going through together. It's very new. Unemployment is up at a high since around 2017. We're seeing that's a lot more prevalent right now, and we'll probably see a little bit more of it. From a markets perspective, financially, obviously that's my background. This isn't uncharted territories. It's definitely a different cause because this is more of a biological causation. But just briefly looking back at let's say 2009 when H1N1 hit in March. So from January to March, the market fell about 30% roughly in 3 months, and that's kind of what we're seeing right now. We kind of saw that from January to March. Again, different story, different times, but we have kind of been in this scenario before. And in 2009, the market proceeded through the end of the year to have one of the better returning years, ending around 26.5% up. So we're kind of in some rough waters right now. That's kind of where we're at. There's a lot of uncertainty. There's a lot of worry, but the outlook is great long term. So I'll leave it with that, and whoever else wants to jump in.
Kyle, anything you want to add to that?
Sure, and spot on. And when you think long range, as you should, looking back, if you looked at where we were about a year ago to the day, you wouldn't see much difference. If so it's that perspective of, oh gosh, things are so bad, but no, we're almost exactly where we were 12 months ago. And interestingly enough, we topped out. The market hit an all-time high around the end of February, and since then dropped about 35%, and we're almost halfway back to where we were already before the drop. So volatility is the name of the game, and we're really just trying to instill that behavioral finance, those behavioral finance concepts in people right now, because it is easy to get emotional. It is easy to get dragged into the negative. And even though we're sheltering at home and doing meetings virtually and such, you're still inundated every single day with all this news and all this negativity. It's impossible to escape. It really is. So I think it's very easy to get caught up in that. It's very easy to be dragged into the. Sorry, my son is jiggling the blinds. It's very easy to be dragged into that just feeling of negativity. And that might cause us to make some decisions that we wouldn't normally make. I think for a lot of business owners, we see things happening around us, and we think that the idea is, pull back, hold off, safety, 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 when really our personal economic situation doesn't warrant that. Does that make sense? I think a lot of us, as entrepreneurs are in a little bit of a different boat than the macro, what's happening in the greater economy. So keep in mind, it is your personal economy that matters in your decision making, not what you're hearing on the news.
So to kind of take that, so basically assess or reassess your risk levels in your investments. As a personal person or in a business, how should we look at those different things that are there? And anyone feel free to chime in on those.
Well, as far as investments go, I mean, really the name of the game right now is just evaluate, but stay the course. Don't let anything slide by. This may be a good time to balance, or just look at your overall risk level. But it's not time for any big sweeping moves unless you have cash to invest, in my opinion. But it's less that and more of, I believe, just keeping in mind, like I said, your own personal situation and not getting caught up in a lot of the negative news media. I think I missed the second half of your question.
No, it was just assessing. Is it a good time to reassess your risk levels, or I guess is where it was, and then in investments and or if I have business investments also.
As far as risk level in a portfolio, absolutely, you should be reassessing that all the time, in my opinion. We do that every single time we meet with our clients. We review their risk tolerance. But this also, I think, is going to give a lot of people a brand new perspective on emergency savings and having that cushion. And an emergency fund, not just personal. This now also applies to business in a very big way. I don't know if a lot of you are on that East Orlando Chamber of Commerce sounding board, Chamber sounding board Facebook page, but Yesha Patel made a great post. She was asking, hey, has anybody gotten any of that stimulus money? And, you know, as that post went along, a couple of people chimed in, actually, yeah, we did. So you're seeing businesses look for those things. And that tells me, well, how much savings did that business have to begin with? So I think it's going to give a lot of people reason to reevaluate that. And Tanya, I know you can speak to that from a fundamental standpoint for sure.
Yeah, I was going to add to that, you know, you're right, it's giving a lot of people perspective on, you know, as they're planning out their business, they're not thinking about long-term, you know, goals where, you know, some people may know I recently, you know, kind of added the Ramsey preferred coaching for financial coaching for personal. So I added it because I see it along the lines of both business and personal is, you know, you have to have goals. You have to have goals, and you also have to have those savings put aside for the event that these things happen. You know, you have to be able to plan ahead. You know, we don't know what the future holds, but if we had our, you know, kind of emergency fund put aside, either on a personal or business level, then, you know, we wouldn't have to rely on these government-funded programs like that PPP, you know, program where you saw the funding went really quick, because a lot of people did not have those savings put aside. You know, being able to have kind of money put aside for these types of situations, you know, would have went a long way. So, you know, being able to plan, having those long-term goals. And that's kind of why I preach, you know, there's a methodology called Profit First that I kind of preach to business owners. And it kind of teaches you, it's a little bit like kind of like if you ever heard, you know, Dave Ramsey, it's basically you're bucketing money that comes in. So you have income that comes in and you're bucketing for, you know, your profit, money that you want to put aside for your business, you know, what you're going to pay yourself, what your expenses are, and then I forget what the other category was, but you're basically bucketing out money so that, you know, money that comes in, you're applying it and then trying to maintain a budget. So say you bucketed, I don't know, 40% of your income towards the expenses, you try to maintain, you know, your expenses within that 40% and try not to go over. So that way the rest of it, you can actually pay yourself, you know, even if you start out with, you know, 15% of the income, maybe you pay yourself 15%. And then maybe you put aside 10% for the rainy day fund. You know, you put aside 10% and then save that for situations like this. So you have your kind of goals set, and then you can save and then be in a better position next time this happens.
So to take this, and Sam, maybe you can help jump in on this one, is if you have a business and you are in a financial crunch or it's tied to your personal business owner, you know, what are some of the strategies? Is it worth looking at potentially pulling out early distribution from a retirement accounts or things like that? Is there any suggestions to keep the business afloat? And if so, what are the implications if you were to do so?
Right, so that's a great question, and it's something that you know, we're seeing come to the surface a little bit more, you know, in terms of options. So, you know, from an individual standpoint, if you have, say, a retirement account, if you were to take a distribution or a withdrawal from that before 59 and a half, in most cases, you would be taxed at your income rate. and then you would also get hit with a 10% penalty tax. Okay. So with the CARES Act in effect and the changes that have surfaced, so the IRS has basically waived that 10% penalty because they know that there's going to be layoffs, there's going to be some tough times, people are going to need alternative sources of income. So what that looks like is you have the ability to withdraw up to $100,000 from a retirement account if you've been affected by COVID, and there's a few different things. It's a loose description of affected. It could be a family, it could be a layoff. There's a lot of things. So you'll still pay income tax on that, depending on which type of account it is, and you'll have up to 3 years to put that money back if you want to. When it comes to looking at those options, because the way that I coach and teach my clients, we look at long-term goals. We have a destination and we pack a bag for it so that we know we have what we need. If this is something that comes up, I like to keep it as more of a last resort. It's money that you've put away for your future. It's money that you've allocated towards that future goal. We know that it's something that you're going to need. So I would consider I usually tell people to look at other options first, and then kind of use that as more of a last resort. But it is there to help individuals, to help businesses right now in this time, because we know that there's going to be problems. We know that there's going to be layoffs. So it is put in effect for that reason, for a cushion and relief.
Kyle, anything else you want to add to that?
Couldn't agree more. Last resort for sure. And there have been some other exceptions as well. For example, required minimum distributions have been waived this year as well from retirement accounts. So if you were 70 and a half or older and you had to start taking from the IRA or 401k or inherited IRA, that has actually been waived for this year. Kind of a head scratcher is on that one from my seat, but I think Sam definitely hit the important points. If there are other options, straight up, those should be explored first. Retirement accounts are retirement money. They are for your retirement. You take early and it will affect your retirement for the rest of your life. Plain and simple. He's being very PC about it. I'll just say it straight up. Don't do it unless you absolutely have to. Just don't do it. Now, for a very unusual thing is like he did mention, and I wonder how many people caught what he said. You actually have the ability to pay back an IRA. You have up to 3 years. That's never been offered before. That is very unusual. 401k loans are not unusual. That happens all the time. I'm sure people on this call have taken 401k loans before. But being able to take and put back from an IRA is almost unheard of. Some interesting things we're seeing right now, for sure.
So probably a very important thing to do is to make sure you understand your financial statements. And Tanya, tell us what your recommendations are there. Because a lot of people hear, income's not coming in, or I've got expenses going out and not sure where things are going. So talk a little bit about understanding your financial statements and why that's important. Obviously, if we've got to pay the rent or keep businesses. So jump in on that.
Yeah, so understanding the financial statements is very important. I know one thing I do with my clients, I actually go through the financial statements and explain it to them so they understand it. The 3 common financial statements are the balance sheet, the profit and loss or income statement, and the statement of cash flows. What I would probably do is take a look at both your balance sheet and your profit and loss or income statements. The profit and loss will actually usually categorize it, breaks it out between all of your expenses and all the categories that you're spending money in. So you can actually look at that and see, where your money is going over, said period of time, whether it's the last year or last month, and then figure out, if you need to cut back, what are the areas I'm spending a lot of money in that I can cut back, kind of things like that. And then just kind of monitoring, those three main reports just to kind of understand where your money's coming in and where it's going out and how you can improve. I know some reports that you run, like the one I usually run, I'll do a comparison of previous periods so I can actually see, okay, there was a percentage increase or decrease in a certain category for that, period of time, whether it's a monthly period. So I can see, this month I did great. Last month, I had an increase of income coming in. And I also increased spending money on, marketing. So, it made an impact, the marketing that I did, because now I have a boost in income. Or you can see areas where you might have spent a little bit too much money and you may need to cut back.
So the rest of the guys, go ahead. Anybody else have a chime in there? So moving forward on that, what are some of the opportunities that we might see in the market right now that can help with those pieces that we're talking about, looking at your financial statements and things? What are some opportunities that could be some potential?
I would say, and I've talked to a lot of my clients about this. A lot of people recognized that the market was fairly overvalued. We're talking about opportunities, so it's no secret that we were kind of in an overvalued market. And I think a lot of the electronic trading was responsible for that. But I've even been speaking with a lot of current clients who had cash sitting on the sidelines, and from an investment standpoint, that's where I feel the opportunity lies. If someone has, funds sitting on the sidelines or hasn't made their IRA contribution for the year yet or something like that, maybe an opportunity to look at that, because the way that I always look at down markets is that it's on sale. It's available at a discount. Which, I mean, really, just mathematically, that's the truth. Obviously, you can't ever predict what things are going to do, but with that long range thinking, and I just made a video blog about this yesterday. I'm waiting for my compliance department to approve it. Generally, and it's very, 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 very general, you can look at history and say, hey, if you invest this way, you can generally expect this. And if you invest this way, you can generally expect that. Of course, everybody's different. Everybody's situation is different. But anybody with a lot of cash sitting on the sidelines right now, I couldn't think of a better time to at least explore opportunities to get into the market right now. Absolutely, positively. And this is from someone who doesn't give investment advice over a webinar. And that's not investment advice. That's just a general perspective. That's just my personal opinion.
Sam, anything you want to add to it?
Yeah, I mean, Kyle, I could not have said it better myself. I always like to say, if you want an oak tree today, when would you plant it? Right? You plant it 20 years ago. When's the best time? 20 years ago. But when's the second best time? The second best time is now. Right? It's always a good time to be in the market. And then something I would add, and I'll probably touch on it later, but if you have some money set aside, aside from your emergency fund, because that, like they had touched on, that is something that shouldn't be touched. It is for emergencies. It would be, I think, what I've been coaching some people to do, and what we've explored is putting the money in kind of systematically over an allotted period of time, rather than just getting in all at once. And basically what this does, it's a way of systematic investing. It allows you to buy more shares of could be anything, right? And again, this isn't advice. This is just me speaking, strategy. But it allows you to buy more shares at a lower price and less shares at a higher price, right? It's what we all do if we have a retirement account. It's what we do in our 401ks just over a longer period of time, or 403bs. You don't even realize that you're doing it because you're putting it in every paycheck, and it's buying into the same investments regardless of where the market's at. It's like getting gas. You're going to get gas whether the price is $5 or 99 cents. You need it, right? So that's, I mean, Kyle, you hit it the nail on the head. That was perfect.
I know we had a lot of questions that were popping up on the chat lines, and it looks like you guys have been answering those on there as we've been talking through. So I'm going to kind of leave those there, and we can kind of come back to them if we need to. But we've talked about putting your money into things. So like, how do I know if the market or has hit the bottom? I mean, I know it's been very volatile, basically just going up and down and all that. So talk to us about that a little bit.
Yeah, man, I wish, and Kyle and Tanya, we can probably also, I wish I had a crystal ball. I wish I had
the question, Andrew.
I wish I had the perfect answer. I wish I knew. Honestly, if I did know, I probably wouldn't be here. I'd be on a private island with a remote something. It's tough, you know. And if you try to time it, if you try to wait to put money in it and wait for the bottom, you'll never get in, and you'll end up kicking yourself. And that's kind of why I had mentioned before. I mentioned systematic investing. Like I said, the best time to start, the second best time is now. But systematic investing helps alleviate the emotional part of it, and B, getting in at the wrong time, right? Because it's more about the time that you spend in the market versus trying to time it. And again, say you want to get in the market with X amount, right? Because the market's up and down. Spread it out over a week, spread it out over a couple weeks so that you can get more, like I said, out of your money at the lower cost, especially when we see the market like it is now, up and down on a daily basis, and it's very inconsistent. That's going to be the most efficient way. And again, I wish I knew exactly when the bottom was. I know I didn't answer it directly, but.
So with that, you know, if you run into hard times, and this is a segue into something I have for Tanya here, but you know, unemployment has been rising. We got folks that are staying home. People are getting furloughed, the whole 9 yards with that. What should we do, or what's a good strategy for if all of a sudden our income is dropped, personal income is dropped, I guess is where this would be, but you could call that personal and or your business income. What are some of the strategies? What should we be doing on those?
Yeah, good question.
Go ahead.
So there's a strategy that, you know, like I kind of follow Dave Ramsey, if you haven't noticed, but there's a strategy he calls the 4 walls, which, you know, he talks about protecting the 4 walls. And I would agree that, you know, on a personal level, you should protect the 4 walls, but then as well as the business, you know, like there's certain things that you have to pay, you know, like rent, you know, your shelter, you know, on a personal level, it's like shelter, transportation, food, you know, just making sure you have the basics. Same thing applies to like a business, you know, you have your rent, you have to pay insurance, you know, things like that. Keeping all the essential items and trying to cut back the non-essential items, you know, like is now the best time to start throwing, you know, paying for ads on Facebook? It may or may not be. You know, is now the best time to be buying, you know, a bunch of banners to put out when nobody's going out? You know, maybe not. You know, just trying to cut back and looking at all of your expenses. And if you did your books properly and you categorize them correctly, then you can see how much you're spending in each category, and then categorizing them as, you know, is it essential or non-essential? You know, going through that exercise of identifying, is it really that, you know, is it really needed right now in my business? And then if it's non-essential, then cut it out for now or lower it, reduce it. And then just kind of focusing on, you know, those essential items that you really need. So until you can start, you know, kind of bringing up the income and then looking for those creative ways of trying to, you know, kind of generate more income. You know, like everybody's doing those Zoom meetings and, you know, finding creative ways to market in these kind of times.
Anything else from our financial panel there?
I mean, Tanya, you like I said, that was fantastic. I agree with you 100%. And you guys have already touched on it. The emergency fund, emergency fund, emergency fund, emergency fund. I kind of try to break it down into about 3 steps. The first thing is make sure you know where you're at with your emergency fund. Have 3 to 6 months of expenses in cash in a money market that you can get to if you need it, but make sure it's somewhere that's just inconvenient enough that you're not going to go get it on the day that you don't need it. Okay. If you don't have an emergency fund, you do now because you're starting one because you need to. Right. So that's kind of the first thing. And then obviously, if you're experiencing a layoff, collect the benefits information, understand what your benefits are, what you have, and then get in contact with your tax professional, with your financial professional. Look at options to make sure where penalties may lie, and then talk to your health insurance and your life insurance partners. Those are really important because now that you're not under, you may or may not be under the umbrella of a group plan, so you may not have coverage. So that's extremely important to talk to those people as well.
I think as well, if I can add something real quick, Andrew, before we move on. I think a lot of people are now realizing how frugal they can be if they have to. And, it's like Sam and Tanya already said, figure out what those essentials are and then cut back if things are tight. Well, hey, guess what? Now it might be a little easier to recognize, okay, what is 3 to 6 months worth of essentials really looking like? Because I think now, since we're being forced to shift our lifestyle a bit, if we had to go into survival mode, I think we have a better view of what that might look like. I think this is going to give a lot of people a lot of planning points to stick in their back pocket for later. I can see 15 years from now, my son telling me he's bored. I mean, back in 2020, back in my day, yeah. but really though, I mean, we laugh about it, but it gives us, now is giving us the opportunity to see, okay, what does it mean to just be in survival mode and see what essentials are? So I think with that in mind, you can budget going forward. You can definitely, and if you don't need that stimulus check, you now have an emergency fund. So treat it that way.
So for a business, you talked about emergency fund. We've kind of touched on it for business. What are some strategies a business can do? Can you invest in that? Are there ways to make your money work for you in a business as an emergency fund? So it's not just sitting in the business checking account. What are some other avenues the business can put money into something? Should they put it into the stock market? Should they put it into a mutual fund? What can a business do?
Well, a business that is not in business for the primary function of investing, obviously, because that's all mutual funds are. They're businesses that just invest. That's what you're buying, shares of that. But I mean, I don't typically, unless a business or an organization has some kind of endowment or some kind of lump sum that they're looking to preserve and distribute and grow dividends out of, I don't generally encourage small businesses to look too much at investing. That's just me personally. I think we all know our business better, and if I were going to invest in my business, I would do so with marketing, staff, technology, and such. I wouldn't. I mean, Integrity Financial doesn't have any investment holdings in our name.
Yeah, I think where I was going with it was just kind of saying, okay, I need to set up an emergency fund. Can I make the money work for me? Meaning, let's say I'm a business and I've got, let's just put in money, $30,000 sitting out there. What should I do with it? Should I stick it into just a CD? Do I need to stick it into can I make more money with it by putting it into something? I guess that's where my question was kind of going with that, or that question coming out. I've seen some dots there. Is how best do I make my money work for me if it's my emergency fund for a business?
Well, I think everybody on this call would agree with, when it comes to emergency fund, don't put it at risk. Just don't. That's the advice that I give. An emergency fund is solely that Yeah, okay, if you can get 0.5% in a money market or a high yield savings or 1% high yield savings, great. But other than that, it's just the whole risk reward balance. And the whole point of emergency fund is for it to always be there. So as far as investing and putting emergency money at risk, I don't like the sound of that personally.
Okay, no, just we're trying to, I saw a couple pieces in here. People were looking, where can I make my money work for us? And we talked about having an emergency fund. You know, do you want it just in a checking account, or are there better places to stick it during that time? So, let's see, I think I got a couple other here, the questions that were submitted. And I think you guys have done a great job answering the ones on the chats. If there is something that you want us to address to everyone, please go ahead and type it in there. We will share it.
Tanya's killing that.
Yeah, you guys kind of knocked out everything that I had here that was submitted for questions. Well, let's go into some of this funding, I guess, here with Tanya, with the disaster assistance, and if necessary, and applying for the SBA loans and the disaster assistance relief. There's some time constraints on that, on those pieces there. I know with at least the no interest loans for like a year. So if I'm a business and I took that assistance loan out and it's not going to be a forgivable one, what strategies would you say as financial planners and working with businesses as consultants on that? Do I need to get that paid off right away? I'm trying to get my business up and running, and I got to use that money for expenses to get going. What are some recommendations and things there for folks that have taken loans and pieces? What are your recommendations there?
I think the biggest recommendation I had was, kind of separating that money that you received from the government, because you want to make sure that you track all of your expenses paid out of that loan, because the government may come back and ask you, they may potentially ask you, what did you spend it on? Because some of them have requirements, like you have to spend it on specific categories like payroll costs. And, we obviously don't want to see you taking that money and going on vacation. So we got to make sure you're spending it towards, the business expenses, and that you're meeting the requirements of that loan that you took out. If you got the, EIDL, which is that kind of emergency fund, or the PPP loan, they have specific requirements of what you can spend the money on. So I would move it into a separate account to make sure that you track every penny that comes out of there, in case you have to go back and prove, what you spent it on later. And then, just like anything else, it is a debt. So, you want to pay it off as quick as you can. So once you do find the money, to pay it back, then I wouldn't let it linger. You don't want that kind of holding over your head. So if you can afford to pay it back, then pay it back, as sooner than later. So.
Anyone else on that topic?
Nothing to add here. That was pretty much all encompassing.
Great.
I've heard that, especially like with the PPP loan, which could turn into a grant, basically, if it's all used for payroll and you fall within the requirements for that, is to just go ahead and open up another checking account at a bank or your financial institution. And once again, this is another great reason and to put things together is to build these relationships with your financial advisor, your accountants, your bookkeepers, your bankers, the whole 9 yards, because when a time comes like this, you want to be able to pick up a phone and make a quick call to folks. So building those relationships and having relationships with people, I think this is a huge responsibility to build that between you, because you're talking about tough times, and these folks are professionals that are here to help you. So with those things. See, am I missing anything else off the question list that I've gotten from everybody? And are there any other texts? Like I said, you guys have been jumping in. Let's see. If you use all your PPP for payroll, will you have to pay it back, or only the portion used for other business expenses outside of payroll?
I haven't read through all the, like, usually I direct people to the CPA because I haven't read through all of the requirements yet. And maybe even Justin, knows, like, a lawyer may be able to kind of read through all of that verbiage. But I believe, like I said, I think as long as you're keeping it towards business expenses, and I think they might have an outline of what you can spend it on, just making sure that you track everything in case they do want to audit what you spent it on, because if they see that you spent it on something that you shouldn't have, they may ask you to pay it back. So
Yeah,
they may forgive it, or they may, like I said, if you spend it on, I took half of it and spent it on vacation, obviously that's not a business expense. So, making sure that you track every penny that you got from the government, and then being able to prove what you spent it on and it was business related, I think you should be okay.
yeah.
One thing I
Go ahead.
Go ahead. I was just going to say, one thing I did want to bring up, which I don't think was discussed or asked, was there actually are businesses that are thriving in these times. And, I've had a couple people come to me, which I think I ended up sending to Kyle, where, they have, they actually have a surplus of money. And they were asking, what is a good, I guess, emergency fund to have? Like, I had a woman come to me recently where her husband was just, he had maybe 2 years worth of emergency fund. I thought that was a little excessive to have 2 years. That's what he felt comfortable with. So, one thing I just kind of mentioned is, you want to look and, you want to invest it. I kind of agree with Kyle. Stocks are on sale right now. So, now is a good time to buy, because long term, if you look at stocks, then, or any kind of investments, then long term, it's going to come back. It's going to bounce back. It's going to grow. So do you really need, say 300,000 sitting in a bank account? Probably not. You may only need 6 months worth, and then the rest could be growing for you over the next, 10 years, 20 years, until you're ready to retire. So if you are in that situation, you may want to cut back and say, okay, what do I really need? Like, do I really want 6 months? Do I really need 3 years worth? Decide, what is a good number for you, and then take that extra and actually invest it so you can grow it. So you're in a better position later, because you can always take it back out if you need it, but it's better to invest it and grow it, instead of sitting in an account making like what, 0.1%.
So what are some, let's talk a little bit about the future. What do you recommend, or any suggestions for folks? We've got about 10 minutes left here, but planning for the future, what are some great things that you think you can put into place? We talked about emergency fund. Anything else that you have recommendations or suggestions, I guess I should say, thinking for the future to combat these situations?
Right now, I think it's just evaluating your long-term goals. You put them in place because you know where you want to be, you know your destination. And it's really just looking at, hey, am I still on track? Do I still want to be here? And am I still taking the right steps to get to where I want to be? Whether that's retirement, whether that's investing for a home, whether that's education or generational wealth. There's plenty of avenues you can go down. But now is definitely the time to evaluate your goals and make sure you're still on track. But I'll leave you with that.
Kyle?
For the future, I think anything I would say at this point would be redundant. Because I think, well, I mean, really, we've all had a chance to see where the shortfalls lie in our personal and business situations. I mean, it has shaken out. There's not any of this, oh, a month down the road we'll see. No, we've been in survival mode. Businesses have been, a lot of businesses have been running on fumes, and a lot of You know, you can see it with your eyes. Like, this is the big difference between 2008 and right now, I think. In 2008, the entire American financial system was brought into question, which was, to me, a lot scarier than this. With this, you can actually see with your own eyes the interruptions in the supply chain. Fair. Parks closing, restaurants closing, businesses closing, all fair, but you can see it. It's on the surface. It's not something scary and unknown lurking down beneath it. Oh, you know, I don't understand any of that, you know, high financial operation stuff. No, it's everything that you can see yourself. So I think when it comes to planning and the just in case and the if this happens again, what to do, you know already where your shortfalls are, and you know what needs to be beefed up, because it's either already happened or you had already planned well enough to where it won't happen. So I'll leave it there.
Tanya, anything else on your end from that?
No, I don't think so. I think it was covered.
All righty. And like I said, there were a lot of questions. You guys, this panel was all over it. So let's see. Did get one here. Do you anticipate more business for financial planners moving forward due to everyone's fear? And if so, for how long?
I mean, I think it depends on who you are. Obviously, stuff like this brings up a lot of fear, and some people don't like going through it alone. Having someone to be the voice of reason and to help you, you know, work through it and get through the muck to get through the other side definitely helps. I think really it just depends on who you are. Some people love doing it on their own. Some people love doing all the research, you know, and more power to them. If you love what you're doing, keep doing it. But for the people that do get a little nervous, I think there'll be a little bit of a realization, and it's more so just partnership. It's more so partnership and having someone that's on the same page with you and understanding what's important to you. But again, I think it varies from person to person.
Mm-hmm. I think half of our job, Sam, is making sure people don't self-sabotage. I mean, truly, especially at a time like this, it's very easy to have a knee-jerk reaction, especially when free IRA withdrawals are on the table and such like that. But as far as more business, I think a lot of folks have come to the realization of hey, you know what? I planned pretty well on my own. I got through this pretty well. Or, oh, you know, geez, I probably should talk to someone. Sam covered it fine. I'm just repeating at this point.
All right. Well, let's do this. If there's no other questions popping up on the chat list, what's a parting shot that you'd like to either sign of inspiration or a piece of advice that you'd like to share with everybody before we wrap this up? We've got just a few more minutes left here. So Tanya, what last bit of advice and or suggestions can you make to everybody here?
Well, just the last piece of advice, you know, this with the whole crisis going on, it actually does give you, you know, more perspective, like Kyle was saying, into, you know, kind of what your budget is. You know, we're kind of forced into being more frugal. So, you know, it kind of does help you with, you know, if you've never budgeted before for your business, now's a good time to start so you can actually carry it over into the future, you know, because maybe it'll help you now when things start things start turning around and start looking good again. At least, you know, now you can see, okay, you know, at my lowest point, you know, this is what we spend it on. Do I really need to spend more money in these areas? You know, am I getting the return on investment that you know, if I'm investing in, you know, this type of marketing, what's my return on investment in that? You know, was I really getting any kind of return? You know, is it worth continuing to put money towards that like I did in the past? So, you know, kind of having a budget, you know, kind of would really help right now and just continuing in the future. Same thing with personal. You know, I always tell people if you can master the art of budgeting, you're going to do it your whole life. So it's good to learn it now.
How about you, Kyle? We'll go with Kyle here. Any last parting shots, advice? tips?
Yeah,
Tricks?
and this is more on the behavioral side. Stay away from the negative as much as possible. Don't make emotional decisions and focus on you and your family. Don't let everything that you're being inundated with all day, every day on news and social media influence your decisions. Remember, the only people you are responsible for are your own household. So don't let what's happening in the world drag you down, as easy as that can be. Stay the course, stay disciplined, stay focused, and you will be fine.
Great. And Sam, to wrap it up, what you got?
Yeah, I'll leave you with this, and I say it all the time. People probably hate listening to me say it, but Cal hit on it. I mean, be careful what you put in your ears and what you watch. Get as much information straight from the source as you can. Like Kyle said, there's a lot of negativity out there. Find something that's giving education and information. That's why I love, Andrew, what you and Dorothy put together. You guys have been doing this throughout the whole process. You're bringing education to the members of the chamber. You're bringing, solid information to everyone. When you're looking at different media outlets, different news outlets, there's a lot that can get missed or misinterpreted through the process from who saw it to who's covering it now. Fill yourself with, like I said, as much info from the source as you can. And that's really the main thing. Like Kyle said, surround yourself with positivity right now. That's key. Take care of your family and your health.
Well, we really appreciate all three of you being here today. We've got lots more slated for the rest of the month and moving forward. So we appreciate all that you're doing. I know everybody, and appreciate all that have been able to jump on the call. Thank you for being here. This will be reposted on our YouTube channel. Feel free to subscribe. With that, we want to thank all of those that are here. We also want to make sure we thank our trustees. And once again, to those folks, and that's Advent Health, Avalon Park Group, Avalon Insurance Services, Duke Energy, Orlando Health, Great Florida Insurance Company of Hunters Creek, the Orlando Law Group, and Suburban Land Reserve. So with all of those, and Fairwinds Credit Union, forgot one more there. But with that, we want to thank everybody for being here. Thank you for your time this morning. Everybody stay healthy. We will get over this and through on the other side. And we will have this posted for you on our website, YouTube channel. Please feel free to see us. And if you want any more information for anybody here, just go onto our directory. You can find all of these folks. They're members of the East Orlando Chamber. They'd love to be able to talk to you at more greater length for any of the concerns and questions that you may have personally that we did not address here on that. So thank you all. We appreciate it. Have a great rest of your afternoon and day. And we will touch base with you again real soon. Have a good one. Thank you so much.
Thank you, guys.
Thanks, everyone.
Thank you. Have a good one.